Okay, so these are the last few videos for the Applied General course, and here we're doing break-even analysis, and here we're looking at Luigi, who runs or is thinking of setting up an organic cafe. There's lots of competition around from Subway and McDonald's, and that's the case study. Okay, so the question then asked was, use information to analyse the value of break-even analysis in this particular situation. Okay, so the big advantage of break-even analysis is that you can use what-if analysis. So therefore, as Luigi's Cafe is organic, you might argue that therefore that they might be able to charge higher prices. With break-even analysis, if you charge a higher price, then the break-even point will be lower. But then you can do a more competitive price, and you can see how many coffees that you need to sell to be able to compete and survive with Subways and McDonald's. So big advantage, what if analysis, charge different prices, find out the break-even point from there. Because there's lots of competition, the price should be competitive, organic, therefore you can charge a higher price. Can the actual fixed cost of the cafe be reduced? One fewer staff member may save you £20,000 a year, and that will therefore also reduce your break-even point. And you could use break-even analysis to decide whether or not you go ahead with the business. The drawbacks of break-even analysis, it does not mean that you sell that number of products. It just sorts out the break-even point for you. Okay, so break-even analysis on there. So the advantages and the disadvantages of break-even. What-if analysis, the big advantage, find out the break-even point, obviously, simple to use, a business decision tool, you can use it for loans. That is the equation that you use. So you just find out your fixed costs, you find out your selling price, what your average selling price is and what your variable cost is. You put the numbers into the formula and then you're able to work it out. The disadvantage is it assumes that you sell all of your goods, which may not be the case. And it doesn't work very well with semi-variable costs, which remember is a fixed cost plus a variable cost. It's difficult to draw that on the particular diagram. Not impossible, but a little bit tricky from there. So that is break-even analysis, and then on here we've got a very simple question on break-even analysis. Right, fixed cost 30,000 quid, selling price 10 quid, variable cost 4 quid. Right, remember we did this in terms of the microgreens. We decided that it cost about £30,000 a year to run that particular business. We then do the break-even point, fixed costs, selling price minus variable costs. And we do that, 30,000 divided by 6 quid happens to equal 5,000 units. So 5,000 units is your break-even point. If we did draw a break-even chart, that will be where your total revenue is equal to your total costs. If, however, you produce, say, 10,000 units, which would actually give you a profit of 30,000 units, right, then your margin of safety, because your break-even point is 5,000, your actual production is at 10,000, your margin of safety will in fact be 5,000 units. We could also work out the profit at 10,000 units. We do 10,000 times 10 quid, 10,000 times 4 quid, 100,000 minus 40,000, gross profit 60,000, minusing your fixed costs, which happen to be 30,000, 60,000 quid minus 30,000 quid, and you have a profit of £30,000 on there. So break-even point, microgreens on there. And the last one today, if hopefully I can get it up. Right, so on this one again, we've got selling price 10, variable cost 4 quid. It's not going to work, is it? Oh, selling price 10 quid, variable cost 4 quid, fixed cost 30,000 quid. Work out the profit at 20,000 units. 20,000 times 10, 200,000, 20,000 times 4, 80,000, gross profit 120,000, fixed cost of 30,000 quid, therefore your operating profit is £90,000. So, once again, let's reiterate again, the main advantage of break-even analysis, what-if analysis, simple to use, you can use it to get a loan from a bank, and it also gives off the break-even point. If we did in fact make 10,000 units, we're just going to do the special order decision. If you had 10,000 units, your break-even point would be 5,000. We've done that on the previous diagram. So if there's another order of 10,000 units at £8 per unit rather than £10 per unit, then we would have an extra order of 10,000 units. You're making £4 per unit, so your profits would then increase by 40,000 quid. So that is called, if you're beyond your break-even point, you only need to, you've already paid for your fixed costs, you only need to take into account variable costs in that particular decision, and that is it. Thank you.